Welcome to the fourth class of the Elliott Wave Blocks and Volume Profile course. Today we are going to work with the strategies, work on the strategies to trigger trades, to show you some other examples, some additional examples, and create a whole system around this Elliott Wave Blocks concept. Here we have the Elliott Wave scheme, the Elliott Wave complete market cycle. And on the previous class, we were explaining the way to draw the Elliott Wave blocks, connecting the Elliott Wave theory, linking the Elliott Wave theory. And today we're going to work on the strategies. So we know that, let's say that we are looking for this Elliott Wave block here because we want to trade the wave 4. And we look for the price to give us a 3-wave sequence, a zigzag, a flat, a double zigzag, whatever. Any 3-wave sequence could be complex or it could be simple. And we are wondering where the wave 4 is going to be over, where the wave 4 is going to be completed. So we know that the wave 4 eventually is going to finish somewhere. And let's suppose that that we are going to find the trade. Of course, this is subjective from the Elliott Wave theory because the wave 4 can be deeper, can maybe move down to the previous low. Anything can happen. So we are looking at an edge. We are looking at a probability. So the concept is that if we have the rejection, which is just a green candle happening here and closing above the Elliott Wave block, right there, we are seeing in front of us that the orders that were placed here could be sell stops, could be limit orders, could be aggressive orders, market orders, have been absorbed in some way. And after that process, at the Elliott Wave block, we have the rejection. So right there, when the candle closes, and if we are working on the hourly chart, it would be the hourly candle. If we are working on a 1-minute chart, it would be the 1-minute time frame candle, of course. And we are going to trigger the trade right there at the candle close. Patience is required because some traders, when see that the price is moving above the Elliott Wave block, will have that feeling of, I need to trigger because maybe I can miss the trade. So, nope, wait. Always wait for the candle to close. What if the candle doesn't close and rejects and leaves a tail? So wait for the candle to close. When you have the candle close above the Elliott Wave block, that's the buy trade. The protective stop loss is going to be under the low of the Elliott Wave block, or if the price was moving under the Elliott Wave block before, we can use that low. So the protective stop loss will be either below the Elliott Wave block, or if the price moved under the Elliott Wave block during the process, that low. So let's say that this is the risk. Because if the price, after triggering, turns around and starts moving down, it's not something that we want to work with. And as always, at the 1-to-1 risk-reward ratio, let's say roughly somewhere here, so if we are risking 5 points, the 1-to-1 is when it reaches 5 points. If we're using 30 points of a stop, the 1-to-1 is going to be 30 points. But once it reaches the 1-to-1, we have to make sure that we are going to book profits. Partial profits could be 50%, as I have been doing, 50% of the trade. If we were trading with 20 contracts, we are going to close 10 at the 1-to-1. Other options are moving the stop loss to the break-even and keeping the whole position. Other options are booking partial profits, but maybe just 30% or 20% of the position, tightening a little bit the stop loss to compensate and make sure there is a break-even in case that fails, and keeping the other part of the trade active. But it doesn't matter which one you picked, because this is not one of those things that this one is better than the other one. It's more the one that we like more, and with experience, the one that we finish making or having better results. So that's the way to decide. You know, there are so many different outputs that we can get. So of course there are so many combinations, which I believe this is like a general rule where we can just then decide the best thing that we are looking for. So in that process, we go along there. When the price, now let's talk about some targets. So when the price departs, we have to check out this Elliott Wave block from the previous completion of 3 or the beginning of 4. Because if we have a rejection, let's say that the price moves inside and then a nice red candle closes at the other side, that's a big red flag that something is not working as expected. What if a more complex corrective wave 4 is going to start developing? So from there, we're going to say, I have to be careful here. So if something like that happens, we should take out a little bit more out of the trade and be more careful. Now, always when we are following the price, well, not always, 99% of the times, if we look to the left, there is always a reference point on the left. So let's suppose that here we have, let's say something like this, an impulsive leg down, whatever. And we can draw the Elliott wave block from this area. And that's going to be a target area for the completion of our leg if it rejects. Don't forget that sometimes the price just crosses up the Elliott wave block without rejecting. So rejecting is important. It's not just the Elliott wave block, it's the Elliott wave block plus the reaction that price is having at that area. So that would be the way of looking for targets. Then, when the bigger corrective starts, we can draw the Elliott wave blocks as we were covering on the previous class. So let's suppose that here we're finding the end of 2. So we know that the wave 2 can finish in the Elliott wave block of the previous wave 4, can finish in the Elliott wave block of the previous wave 2, or can finish at the beginning of on the Elliott wave block at the beginning of the setup or the cycle. So there are only 3 places where we are going to focus on finding the end of 2. That's it, only 3 places. So the process would be, if the price rejects this one here, we go long. We trigger the bullish trade. If the price rejects this one, we go long here, always with the stop loss below this low or below this low. And the last point of reversal would be this one here. So we can now see that there are three places where we can find the trade. Something else, sometimes the price is too aggressive. So let's suppose that here the price accelerates heavily to the next Elliott wave block with a huge candle moving down, hits the Elliott wave block, and then we have the rejection. That type of scenario is going to be more complex, is going to have a lower probability, because we want to see the price moving slowly into the Elliott wave block. I have prepared tonight some key examples of those that come aggressively, reject, and actually work, but we have to be more careful. So we are going to see that in real life in the upcoming examples. But ideally, in terms of a slope, let's say that the price keeps moving down slowly. If we have a way to compare, let's say with the MACD, the divergence between A and C, better, right? Because the price is slowing down. Don't forget that when the price is moving in one direction and is slowing down, is because the opposite force is entering the market. So let's suppose that the price comes here slowly, and then we have the rejection. That type of setup is going to have a better probability. And of course, when you practice, you're going to start picking your favorites. And you're going to start finding out if you like the ones that come to the Elliott wave block aggressively and reject, and or just the ones that are losing momentum and are moving slowly into the Elliott wave block. Those little details are important. Let's suppose that here we trigger the trade because it rejected the Elliott wave block. So immediately, when you start seeing when you are in the trade, you look to the left and you start drawing your Elliott wave blocks on the left. So here and here. And you're going to pay attention to those levels, because if the price starts moving up and rejects this one here, you're going to book extra profits. Probably you're not going to take out everything, especially if you have a bullish bias, because that could be the wave 1 and here the wave 2 and the price can continue. So many things that can happen. But also can happen that the rejection of this Elliott wave block, the price continues strongly down. So that's why here we need to do something else. After, of course, reaching the 1-to-1, we already book 50% of the trade, whatever, and we can book some extra profits. Let's suppose that didn't happen and the price continues to the next Elliott wave block and rejects here. So the same story. We can book some additional profits. And let's suppose the ideal scenario, the home run, where the price absorbs all the Elliott wave blocks without being rejected. So in that case, we can keep the trade active. We can keep the trade. We can book some profits, but of course, we can ride the cycle, the wave 3, with more confidence. The other important aspect about the strategy with working with Elliott wave blocks is that when you're starting your session, the first step is to find out which was the previous cycle. Let's suppose that we are opening the 5-minute chart on an S&P or a stock or whatever, and let's suppose that we are live here in this part of the cycle. So when you're in front of the cycle, of the narrative, the first step is looking to the left and watching where is the last significant leg. In this case, is this one here. So that would be the first step of the process. Okay, I have a leg on the left side. The next step is drawing the Elliott wave blocks. So here we have one, here we have the other one, and here we have the other one. So that's going to help you to plan your day, because you will say, okay, so I'm bullish. I'm going to do this thing. I'm bearish. Well, I'm going to draw this Elliott wave block here. Suppose that I'm with a bearish bias. So I will sell if the price comes here and rejects. I will buy if the price rejects here, or I will sell if the price rejects here. So we come, of course, with a bias, with a direction that we are looking for the session. And then we look for the levels to get rejected, and that's where we trigger the trade. So those are the general rules. Let's start seeing some examples. So this is a fresh example. Today we were finding, I was looking for this Elliott wave block, and I was looking for finding the end of this wave 4. So this is a real life example. This is the chart taken from the membership, and the plan was to look for the rejection of this Elliott wave block to sell. So as you can see, I'm starting the session here. I'm looking to the left. The last significant cycle was this one here. And from there, I can draw my Elliott wave block. It doesn't matter if the price moves above the Elliott wave block. It is not going to become invalidated unless we have, let's say here, a huge green candle. But if the price moves above the Elliott wave block a little, let's say here, here, and then rejects, that's still valid. So invalidation of the Elliott wave block will happen only if we have here, let's say something like this. Of course, we will say, didn't work. So I'm drawing the Elliott wave block in this case, here from the left. The last high is the one that I'm using as a reference point for the setup. The next step in this narrative is looking for a candle to close under the Elliott wave block. We're also seeing the rejection here, comparing the previous high. And we have a wave count that is giving us the bias of looking for a leg down here to this previous Elliott wave block area. So there we have our plan. And we just wait then for the candle to validate. So my point is that we should never create the plan when it's happening. We always need to have a plan before the fact. So that would be your pre-trading work will be analyzing the market, finding the bias, drawing the Elliott wave blocks on your chart, and having a plan. And in this case, I said, okay, if I have a candle close under this Elliott wave block, it's where I wish to trigger the trade. My risk just above the Elliott wave block, 25 points, and that's it. So then when this happened here, when I have the rejection, I trigger my trade, and we still have the trade active. I just take this chart before the class. So that is the logic. That is the logic. We look for the level, we wait for the validation. After the validation, we just trigger the trade, and we wait for the result. Once we reach the 1-to-1 risk-reward ratio, then we can book partial profits, and that will be a safe trade from there. If it fails the trade after the safe trade, we will finish with a break-even result. If it works, we are going to make some good money on the setup. That's it. Some trades are going to work. Some other trades are not going to work. We need to make sure that the ones that don't work, we lose a little, or if possible, we don't lose anything. And that's why we use the money management of the 1-to-1 technique. So if the setup at the end fails, we'll still have the chance of being at break even. So this is a nice example. Let's go through other examples. This is an S&P chart. These are the setups of the session today. So let's suppose that you are starting your session. Let's say that you're here on this area. So you look to the left. Right? You look to the left. So all this price, if we are saying that you're starting the session and you are here, right? You have all this information on the left. So of course, here we have the Elliott wave block at this area, at this low. We can also have an Elliott wave block here. And you start working with that process. Then the price, we can also have an Elliott wave block here. So you draw all the Elliott wave blocks that you are seeing, and then the price moves down. As you can see, this one right here, there is no chance of buying. The price moves down to this Elliott wave block. If for some reason you were short before, here you have several signals to take out your trade, here and here, two signals. If for some reason you are looking for a buy trade, that is your setup. That is your setup. So green candle or green candle, one or the other. The first one didn't work. If you leave a tight stop loss, well, actually that is not the place to leave the stop loss. It's better to leave it below the Elliott wave block. But let's suppose that you like to work even with smaller stops. So here just below the low. So it takes you out one loss. Then the second rejection, and you were able to capture this leg up. But the same, if we are long, we look to the left and we draw the Elliott wave block that is here. And when the price gets rejected, when the price is rejected the Elliott wave block, if we are looking for a sell trade, that's the entry. If we are looking for booking profits, that's the area, right? So of course, that's the process. Let's have a look at the live chart to check out what is happening here on the S&P. There we go. So here, as we can see, the the Elliott wave block got rejected. So if we went short here, let's say, we are already in profits. Let's suppose that we're looking for the next setup. So we can draw the Elliott wave block here. And we can also draw the Elliott wave block here. So always there are going to be two Elliott wave blocks on any time frame that you are checking that are coming from the previous leg. You can also draw the ones inside, the ones from the corrective legs. So in this case, this will be the Elliott wave block that will be here. If we add the profile study here from the low to the actual price, we can see that the fair price is right here. So probably this sell trade is not a good idea because it's below the fair price. But what if the price comes down here far from the fair price and we have a nice rejection overnight? That will be interesting, right? That will be a buy trade to target this area of the fair price and the Elliott wave block. So in order to decide which one we want to trade, we can add additional tools. But as a guideline, we can draw. And most of the times, even if we're wrong, let's say that we pick the one from the wrong bias, the plan is having at least a 1-to-1 where we can be safe. And if we are safe, then we can just follow the price or have a small loss or not having a loss. These are the setups from yesterday on a 15-minute chart. So same story. Let's suppose that we start the session here and we are here live in this area. So we look to the left and we find the last leg. The last leg is this one here. So we're going to draw the Elliott wave block on the upper side and the Elliott wave block on the lower side. And the next step on the process is waiting to see which one the price is gonna move to. 90% of the legs or the cycles are moving to the Elliott wave blocks. So we wait. And once the price moves to the Elliott wave block here, we can consider buying because it's rejecting. It's simple. So the price is rejecting the Elliott wave block. Don't forget that always the Elliott wave block is going to be drawn by the last candle that was able to hit the lower low of the previous cycle and the following candle. If the second candle is huge, we only use the first one. So those are entry points, 1 and 2. Especially the second one, because the second one was able to move inside the Elliott wave block, while the first one didn't. So we need to be strong. We need to have a strong mindset. We're going to wait for the price to move inside, at least with a tail. So the price moves there and rejects. So objectively, this is the entry point on this setup, right there, when the Elliott wave block got rejected. Then, when the price gets here to the next Elliott wave block, it is not getting rejected, and the price continues. Then it moves back to the Elliott wave block that we draw in the morning, and right there gets rejected. If we are long, we are going to book profits, additional profits. If we want to find a sell trade, that's the trigger. So the trigger will be there. The stop loss will be either here or above the Elliott wave block, which in this case will be huge, the stop loss. And if we have a 1-to-1 during the leg down, we're fine. If not, we will have a stop loss. But also, the older Elliott wave blocks are going to help. And if we start seeing the rejection here again, and the rejection again, and the price unable to break down the Elliott wave block that we were working here with, those are signals that we should be careful. There is something else. This is the case where the price moves up aggressively. It's different to this one, where the price is more choppy, it's overlapping, and it's slowing down. So of course, this one is not a good trade, because the price moves up fast to the Elliott wave block. But even if we trigger the trade, we have two signals after saying that the price is not wanting to move down and that this is just a corrective leg and the price is likely to continue. So clearly, we have enough time to make sure that we are making a mistake. If, even with all the alerts, we still say, nope, it's going down, well, we're going to get a stop out. And that will be a trade that didn't work. Then the price crosses up the Elliott wave block, or let's say that here we try it again, that we sell it again, or this one is better. This one here actually is a good trade. This one is not a good trade. This one is a good sell trade, because now we have the reference point on the left. So actually, from the technique, this one is a good sell trade. This one didn't work. Okay, the price moves higher. But then, when the price rejects the Elliott wave block here, don't forget that it doesn't matter that the price before moves above. That's another entry. Let's have a look at other examples. Oh, let's add now the profile so we can have a better idea of what's going on. So here we have the profile. The profile tells where most price was traded during the cycle that we are studying. So the most price traded during this cycle, and I'm taking the profile from this high to this low because we are simulating that we were live there. So there we have the profile at the middle. So if I buy here, I'm good because I'm below the point of control. Not like the example. Look at the difference with the example of the real market right now in the S&P. This is a real chart. So we were saying that this might not be a good sell trade because we are we were pretty close to the point, we were below the point of control in this case. So we can't trade like that, right? The S&P is selling off and is getting far from this area. So in this live chart, we can draw our Elliott wave block here. Remember the last candle and the first candle, these two candles here. And if the price moves down to this area, let's say that we have a stop in action before, and then the price moves down here again, and we have the rejection with a nice green candle, that's a buy trade. So let's follow the price to see if we have something interesting while I continue with the class. Let's have a look at the Bitcoin. So this is an example on the 15-minute chart. These were the trades of the last 24 hours. So when you're starting the session, let's suppose that you are here in the middle, that you're starting your trading right there. So the next step in the process is looking to the left and finding the last swing. Once you find the last swing, you draw the two main Elliott wave blocks that are going to be at the beginning and at the end. You are here, so you can draw these two areas. You can also add the profile if you like. So let's suppose that we are here now in this area, and we have the profile, or here. The price moves up far from the fair price. The fair price is here. This is the fair price. Oops. There we go. Let me clear this up. Okay. This is the fair price. This is our supply and demand area. So while price is moving up, demand decreases and supply increases. So now we know that this is cheap and this is expensive. And this is more expensive. And this is more expensive. And this is more expensive. Okay. But now we have the reference point of the Elliott wave block, which gives us an edge. But there's a problem here. The problem with this setup is that the price hits the Elliott wave block, but with aggressive price. And at least for my taste, this is not a good setup. There are good setups that don't work. There are bad setups that work. But our mission as analysts is always looking for the best possible scenario and the highest probability. We don't need to trade everything. So price coming up fast, I don't want to go against that price. So the price starts moving down, and we are far from the point of control. So at that place, we can draw the point of control here. Could be with the two candles or with one candle, whatever you prefer, because in this case, I believe that the second candle is huge, whatever, right? So we can use one or the other. The benefit of ignoring the second huge candle is that we can have a better execution. So now the price comes up again, but this time here fails to make a hard high. And we have a rejection of the Elliott wave block, and we're still far from the fair price. So this one is a good setup. This one could be. The price moves down. Here we can draw another Elliott wave block. The price gets rejected here, so we have to be extra careful. Book some extra profits. We are not going to buy here, right? We are not going to buy this one because look where the fair price is at. We don't want to buy above the fair price. So the profile can help us. Let's suppose that you don't have the tool, that you don't have the profile tool in your chart. Well, just add a box, draw roughly the 50% line of the box, and you will say, I'm not going to buy above the 50% line of my box. It's too expensive. That's it, right? So there are little filters to avoid triggering bad trades. The price moves down to the Elliott wave block area, and it's getting rejected. Is this a buy trade? No, it's not a buy trade. Two reasons. Reason number one, the price was moving down aggressively. Look at the size of those candles. We don't want to buy after that. We know with a high probability that the price consolidates and moves lower. So we don't want to buy there. There's something else. If we check the profile here, the price, we will be buying at the fair price. And as a trader, I can't buy at the market price. You know, if I buy there, it's the same as going to the Apple store, the most expensive Apple store in the world. That probably is the one in New York, next to the Central Park. I'm buying an iPhone there and trying to resell it online. That would be crazy. I can't buy, when I am a trader of anything, I can't buy at the fair price. I need to buy below the fair price. Let's have a look at the Bitcoin chart to check what it's doing right now. Right? So the price builds actually is a continuation. It's building a continuation. So if you want to find the end of this corrective, you can look to the left and use this Elliott wave block, but that would be selling too far. Let me extend here the profile so we can have an updated big picture here. Right? So that's the fair price. If I want to sell, I need to sell somewhere above the fair price. A little bit difficult here, right? Yeah, I don't see an easy way to sell this setup here, because we didn't have, let's say this is a 1 and this is a 2 and something here to work with as an Elliott wave block. Not always we're having a setup, but something that we knew from the example is that we couldn't buy here because this was fast and we were at the fair price area. So of course, we don't want to act there. We're looking for a discount. These are the setups from today or yesterday price action on the euro. So we repeat the process. I believe that when we are learning something, repetition is key. So here we have let's say that we are starting the session and we're here or anywhere. You can imagine being anywhere, and you draw the main Elliott wave block here and the other one here, and you can have an intermediate one here. That's it. And if you want to sell, you can consider probably this one, but knowing that the price is too fast. So when the price is too fast, moving into the Elliott wave block, as you're going to learn by practicing and practicing, you're going to see that those are not the best ones. But let's suppose that you sell here, in this case, and you leave the protective stop loss here. In this case, you got your 1-to-1 risk-reward ratio, so you are fine, because you are not going to lose anything. Even when you, let's say, make that mistake of triggering where it's not a good idea. So the one that is beautiful is this one here. Because look, we have leg up, we have a retrace, and we have another leg up, failing to continue higher at the Elliott wave block and losing momentum. Please compare the speed between this leg and this leg. Please make that exercise with your eyes to understand the concept. Clearly, this one is fast. Clearly, this one doesn't have enough supply. And now look at this leg up moving. It's losing momentum, is moving slower than this one here. Look at this one here. So that process is selling, that the big guy is selling, with a high probability. You are going to have a leg down, at least to have a safe trade, or probably to have a good trade. So the sell candle comes here. That red candle is the setup, is the validation. The price accelerates into the next Elliott wave block. Don't forget, always, we draw the Elliott wave block by using the last candle from the cycle, the whole range. And the next candle, if in case that is higher, in this case, we don't have a higher candle after that one. So the second candle is inside, so it's just the first candle. And precisely there, the price comes and rejects on that Elliott wave block. So we have a green candle rejecting. This is completely objective. When the price rejects, you can close your trade, or you can consider buying if you like it. Could be, right? This one is like, it's not too fast, it's slowing down, we have a stop in action. The price rejects. Maybe, could be interesting to give it a chance. The price then comes up fast, back to this older Elliott wave block, precisely there rejects. And even with more precision, with the internal Elliott wave block taken from this high, we got the rejection. But this one is not a good trade, because the price came up too fast. Now with the profile. So with the profile, now we have an additional perspective of what's going on. So when we add the profile, we can see that the fair price is here. So now from the profile point of view, this one is not a good setup, because it's at the fair price. So we can filter out this one here. We also have almost another fair price here, right? But that would be complicating things. But when we are near or at the fair price, we shouldn't be trading. And from the profile perspective, this is a better trade, because it's far from the point of control. So we can start mixing everything. Look at this dollar cat setup. We are seeing here I'm drawing here the Elliott wave block. This is the last candle range, and here the price rejects nicely. Then I draw a second Elliott wave block from this last leg, and the price rejects again. So if we're following the trend, we can draw the Elliott wave blocks on the previous correctives, and when the price moves in and outside, we can trigger. So it's absolutely objective. We are not dealing here with Fibonacci levels or EMAs or anything else than momentum and logic of the institutional cycles. In this case, we look to the left, and we can draw here the Elliott wave block on top, always taking care of the last candle and the second candle. And here will be the next Elliott wave block that we are in right now. If the price rejects this Elliott wave block here, we know that cycle is over, and the price can move back again into this one here, or this one here. If the price moves down slowly and rejects, it's a buy trade. It's to keep it simple at the end. Of course, sometimes we're gonna make the right decision, and some other times we are going to have a bad decision. But with practice, you're going to improve those decisions. This is the Euro New Zealand dollar, the Euro Kiwi, and this is a great example. So we have here the Elliott wave block. The price moves down, so there we have the Elliott wave block. We wait. Let's say that we're thinking that this is wave one. The price moves up, is not getting rejected, actually makes a high, and here rejects. So this candle is the validation candle. But let's suppose that we don't want to go against the trend. let's suppose that we prefer the trend trades. Okay, no problem. Wait for the first leg down. And after an ABC and the rejection of the Elliott wave block, this red candle is the trigger candle. Wave 1, wave 2, probably wave 3, the next Elliott wave block to watch out could be this one here. Always the last candle and the first candle after that. That's the right way to draw the Elliott wave blocks. Let me see. The next one is in gold. So you can see that almost all the times we have Elliott wave blocks happening. So let's have a look at this one here. We have the price moving up. There we can draw the Elliott wave block. So we have this rejection, we have this rejection, and we have this rejection. 3 rejections on the same Elliott wave block. No problem. It's going to continue working. As we can see, the price moves up, then builds here the corrective. Right there, we can draw the Elliott wave block as well. Will be here. It rejects nicely. At the same time, it creates an Elliott wave block. Here we have another one. The price moves above that Elliott wave block, got rejected. Moves down to the next Elliott wave block here, but didn't hit the Elliott wave block and was moving down too fast. So this one is interesting to go long. At the same time, we have another Elliott wave block here. The price rejects precisely there and moves down. Right? And that's where we are. So pretty interesting. This is an example of an Elliott wave block that was aggressively hit by the price. And the result was excellent. But again, I think, of course, you can practice and you can make your own experience and you can build your own experience. Probably if you have an open mind and you practice the aggressive and the best ones, what if at the end for you works better the aggressive one? So that's something that you need to practice. From my point of view, I prefer the ones that are not aggressive. So this Elliott wave block is coming from the corrective leg here. So it's just this big candle because it's the last candle of the corrective of this leg is the last candle. And look, the price moves up aggressively into the Elliott wave block. Validates once, validates for a second time, and then, wow, huge move down. So, of course, sometimes those type of aggressive legs are going to happen, but I believe that is not a good idea to trade them. Let's have a look at this other example on the lower time frames. Now we can zoom in into this area, and there we go. And look at this one. This one looks better. So we have the price moving down. Of course, we can draw the Elliott wave block here as well. So perfect, right? This technique is so fantastic. Look right there, the price rejects. So if we're short for some reason, let's say that we sell here, this area, whatever, and if we're short and we see this thing happening, we need to book extra profits. The price comes up again to this area, to this Elliott wave block area, tries to break up, fails, and right here closes below the Elliott wave block. This one is beautiful because it's a 3-wave sequence. And that's the validation. And look, that huge move down back inside the Elliott wave block again. So that is a process, traders. Is of course looking for good setups, but at the same time, common sense. Let's have a look at the live market here on the New Zealand dollar to see what happened next after I take the picture here. Wow, look at the thing. Okay, so what will be the process? Well, this Elliott wave block here, it's important. Let me draw it with the platform. Okay. Another key aspect of this technique is that you can use any platform. You just need a platform where you can draw boxes, rectangles. That's it. So look, the price moves down aggressively into the Elliott wave block. It didn't get rejected, but let's suppose that got rejected. Those are the trades that I don't like. Let's suppose that got rejected in an alternative universe where it got rejected here and also got rejected here. So we have double validation. So this will be a bad trade because the speed of the price hitting the Elliott wave block. All right. Now, what we can expect, we can go to higher time frames to get a better reference areas. So here we can draw our main Elliott wave block from this low, and we know that that's a target area. Probably the price can break down and can continue lower, but that's the target zone. If we move to the lower time frames, let's say we go to the 5-minute chart and we say, okay, we're in front of this monster. Well, the only way of triggering something will be if the price returns to this area. If we miss the entry, we can sell at the actual price. Let's suppose that the price comes back again to that Elliott wave block that builds for 5, rejects, breaks up the Elliott wave block, that could be a buy trade. Because on the left, we'll be already have the prices slowing down. And that will be buying the wave A, or we can buy the B at any Elliott wave block here. The price moves up, let's say, for a second leg. If this is the wave 1, and this is the wave 2. So let's suppose that the price comes here. And if it rejects, that will be the sell trade. That's it, right? So simple. So simple to work like that with the Elliott wave blocks. All right, traders. So that's our class. With this class, I believe it's more than enough with the Elliott wave blocks, because we went through deeply into the technique with a lot of examples, a lot of cases. And of course, we're going to continue working in the membership with more cases, so we can have better views and better perspectives. So please have a fantastic rest of your day or your night, and I'll see you soon. Take care. Bye-bye.